My father would always tell us that there's two types of people in this world, those that pay rent and those that collect. And, son, you always want to collect.
Welcome to the Service to Syndication Podcast, where we interview the biggest and most successful real estate entrepreneurs, investors, capital raisers in the world who have worn the uniform of this great country, those who provide services to our men and women in uniform, and other service-oriented professionals to provide you with the tool sets, the mindsets, and the skill sets to help you conquer your dreams and goals in real estate and to use this wealth creation vehicle so you can live a more successful, happy, and fulfilled life of generosity and prosperity. If what you desire is time, lifestyle, and financial freedom, you've come to the right place. We will bring to you the best real estate entrepreneurs who will give you the insights, the knowledge, experience, skills, so you can go out and crush it in whatever real estate asset class you desire. So grab a pencil and paper, sit back, and enjoy the ride on the Service to Syndication Podcast. Hello, my servicemen and women and other service providers. Welcome to another episode of the Service to Syndication Real Estate Podcast. I am your host, Cedric Marlow. Here on the Service to Syndication Real Estate Podcast, we interview the most successful real estate entrepreneurs, investors, and capital raisers in the world, where most have donned the uniforms of our great country. We aim to provide the tool sets, the mindsets, and skill sets for you to achieve your personal and business goals while using real estate as a wealth creation vehicle to help you live a more successful, happy, and fun-filled life. I am super excited today because I have with me top-notch real estate investor, multifamily investor, Mr. Nitzan Mosery. But before I properly introduce our exciting guest to you, I want to ask a favor of you. Please, if you get some value out of this interview, if you get some type of insight, mindset shift, if you learn a new skill, receive inspiration or motivation to go out and make some progress in your life, please share this episode with some of your friends. Send it to someone you know who might be or could be interested in real estate. Share it on your social media, post it on your wall, and share it in your stories. Help us spread our message while you help others. And for all of you who shared this episode, I want to say thank you. Again, everyone, I have with me Mr. Nitzan Mosery. Nitzan is a real estate investor, entrepreneur, coach, world traveler with over 25 years of experience in the industry. Starting out in New York, he owned a restoration and renovation company and managed his family's commercial portfolios before expanding into large single-family, multifamily, and commercial projects of up to 300 units. After years of traveling the globe, studying meditation, naturopathic medicine, and holistic practices, Nitzan returned to real estate with a renewed mission to help people build wealth and live life on their terms. Today, he is the co-founder and CEO of MTN Investment Group, where he specializes in uncovering hidden value, spotting emerging markets, and delivering strong returns for investors, often achieving full cycle multiples of 2x or more. Nitzan is also the founder of the Multifamily Inc. meetup in South Florida, where he educates and inspires over 500 members on the principles of successful investing. As host of the Traveling Investor radio show, he shares his insights on wealth building, mindset, and living life to the fullest. With his unique blend of hands-on real estate expertise and holistic life philosophy, Nitzan empowers others to wake up, break free from living by default, and start creating the financial freedom and lifestyle they truly deserve. All right, Nitzan, first off, sir, thank you for coming on to the podcast. So, Nitzan, before you became this very successful person I see in front of me, give our listeners a little bit of your backstory, like where you grew up, how was your upbringing, and what in your past shifted your mindset into becoming the person you are today.
Well, thank you, Cedric, for having me on the show, and I appreciate it very, very much. So, excuse me. So I grew up, I'm first generation American. My parents came over from Israel. My father, my father never graduated the sixth grade, and my mother was a Holocaust survivor. So, education was not one of their fortes. but they understood how important it is to get educated. Because they didn't have a lot of formal education, they had to go out and build on their own. And I remember, growing up, my father would always tell us that there's two types of people in this world: those that pay rent and those that collect. And, son, you always want to collect. And another thing that stuck in my mind was that he used to tell me that anybody who owns a piece of land free and clear is one of the wealthiest people on the planet, because they have this, no one can take it away from you. And you can do with it what you want, and you can make it generate money for you so that you can go out and live your life. And that really stuck with me. Growing up, and we grew up in a very modest house in New York, in Brooklyn. It was one of those, I don't know if you're, you being from Philly, you probably know this, the row houses where they're all in big blocks, and we call them today townhomes. Back then there were row houses, and my bedroom was an oversized closet. I grew up, and I remember watching my father wake up in the morning, at 6 o'clock in the morning, getting in the car and going to work and coming back at night, 7 o'clock at night, and really busting his back and his hump to make it for us and to provide for us. And when at the age of 25, he passed away, and that kind of threw me for a downward loop. I didn't know what life was all about, and I didn't know what the meaning of life was, because I saw this man who worked his entire life to provide for his family and then pass away. So I said to myself, there's got to be something out there. There's got to be a better way. And I just didn't know what it was. Before that, I went to college. I went to Pace University, but I never graduated. I was one of those kids that went to party. I didn't have a direction in life. I didn't know what I wanted to do. I always ask myself, I'm 20 years old. I don't know what I want to do when I'm 40. I have no idea. But right now, I just want to hang out and party. And, good, bad, I'm not judging it, but that was the path that I took. And I went traveling at the age of 25. I left New York. I went back to Israel. I hung out there for about a year, watching the sun go up and down in Tel Aviv on the beach. And then a friend of mine told me that he was going to India. I kind of packed my bag with him, and I said, I'm coming. There's no, I got no responsibilities. I've nothing. I broke away from my family, got into a big dispute with my brothers and all of that. So yeah, I was alone, and I went traveling. After my friend came back from India, I stayed for about a year, and I continued traveling the world for another 7 years. As Zig Ziglar said, I was a wandering generality, basically. I had no goals, had no desires, had no plan to do anything in life. I was very content just traveling from one place to another with no money in my pocket. I was earning as I was going. So I was, eating from hand to mouth, going from one festival to another, making a couple of dollars here and whatnot, and moving along. And then, I met this woman who now is my wife and is the mother of my 2 children. And we settled back in Israel, and I opened up the first raw vegan restaurant in Israel. At the time, I was a raw vegan, and I studied naturopathic medicine as well, and all of that holistic side of it, and the spirituality and the meditation and all that. So I figured what a great business to open is a raw vegan restaurant. And I learned very quickly that wasn't my passion either. After a couple of years, I closed that. It was a successful restaurant, but it just wasn't what I wanted to do. And then, my wife at the time, she got pregnant, and we had our first daughter, and then we had our second daughter. And I realized that it's time to get serious. I was 36 years old, and it was time to get serious. In New York, while living in New York, I was working, like you'd mentioned, in the family business. My father went out and bought some real estate, and I helped him manage it and renovate and take it to where it is today. So when my daughters were born, I said, you know what, maybe it's a good time to get back into the real estate game. This is what I know. I'm not a college educated person. So I'm not an engineer. I'm not a lawyer. I'm not a doctor. I don't have any of that to fall on, but I did know real estate. So I told my wife at the time, I said, why don't we sell our house in Israel? Let's move back to the States, get back into the real estate world. And that was in 2008, 2009, when everything was on fire, right? The whole world was on fire.
Right.
So our goal was to move back to the States, buy a house for a year, live in it, hang out, renovate it, sell it, make some shekels, make some money, and continue on our merry way. And what is it now? 16, 17 years later, here I am. And, got into the multifamily world and started building and buying and raising capital and building several businesses that acquire multifamily and student housing. That's kind of where I am now.
Okay. So do you think that seeing your father buy that real estate there in New York was kind of one of those things that
you knew very well and that might lead you to where you wanted to be in life?
It was the one thing I had to fall back on. It was the one thing that I knew. Growing up as a kid, my father would always tell me, hey, the elevator in building 2 is broken, go fix it. Like, I'm a 15-year-old kid, dude. I don't know anything about elevators. And my father was the type of person that go figure it out. Just go figure it out. Go ask, go, you have a job to do. You have a task to do. Go figure it out. And back then there was no internet. There was no YouTube University. There was no Google. There was no Chat GPT. How do I fix an elevator? So, I had to go and figure things out. I would spend my summers on the water towers, in Manhattan, we have the big water towers on top of the buildings. So I would spend the summer, retarring the inside, or if a tenant would move out, I'd have to go knock down the walls and build the walls back up and do all that. So I learned that skill set from the inside. Okay. And so I didn't know that was what I was going to do, but I guess now looking back, I'm grateful for my father for making me do those things and giving me that skill set that would later lead to where I am today. I remember, he would, a plumber would come to the house and my father would say, go stand next to him and go watch. I was a little kid. I'm like, go watch. Why do I need to go watch? The guy's doing this. He goes, go watch.
Yeah. Outside with your friends,
Yeah. Now I learn. I'm like, you know what? That's a good thing that he told me to go watch, because now I know how to fix the bottom of a sink. I know how to do this. And it's funny because now I tell my daughters, I'm like, hey, go watch what he's doing. Go learn. Go look. Come here. Let me show you what to do.
Absolutely. So, absolutely. Because you're not going to be around always to help them out with, their family and their homes and things like that. So, hey, there you go. Go and learn. So Nitzan, just a question that I've always had. And since you brought it up, the water towers, in New York, what are they for? I've never been able to figure that out. And I've never thought to ask anyone until you just brought it up.
That's a great question. So the water towers are for pressure. So they pump the water up to the towers, and then the water pressure goes down and pushes the water into the buildings and gives that, extra water pressure for the top and the bottom and whatnot. So it's to help bring the water into the building, bring more pressure to it, and supply water to the entire building. Remember, because a lot of these buildings were built pre-Civil War or during the Civil War and whatnot. So the pipes are different, the pressure is different, so, they're built in a different way. So they have them. Today, the new buildings, you have the massive pumps in the subfloors and the sub basements that push the water up and all that. So you don't need those towers.
Okay. Got it. All right. So you've had such a unique journey, as I had mentioned in your bio, from construction in New York to traveling the world, studying healing and meditation, to leading real estate ventures in South Florida. How has that shaped the way you approach real estate today?
Oh, that's awesome. That's a great question. So, when we moved to Florida, I started flipping houses, right? Wholesaling, because that was the lowest hanging fruit. What I would walk into a house, and even today in a multifamily property, in the student housing property, I walk into a property when I'm doing a walkthrough, and I walk with my hands open, and I kind of look at the front of the building or the front of the house, and I look at it and I say, all right, talk to me. And I walk in. And when you have your hands open like this and your midsection open, there's a lot of nerve endings inside our gut. That's why we say follow our gut, listen to your gut. Our gut has the same amount of nerve endings and connections as we do in our brain, and it's all connected. So when you're out there and you're open to it and you're ready to receive information, the buildings will talk to you. The properties will talk to you. There have been times when I would walk into a building and I would say, you know what, this is not for me. It's a great opportunity, but not for me, maybe for somebody else. And I would just leave it because, and sometimes I wouldn't listen, and I would buy a house and there would be problems. And I would say, you know what, I should have listened. I should have listened to my gut telling me. So I use a lot of what I learn in the spiritual world to bring into that. But also when, we hear a lot of people talk about, set your goals, write your goals down, do what you got to do, visualize, manifestation. These words are becoming, very predominant in our culture today. But I started using that years and, over 25 years ago when I was traveling. I was visualizing where I was going. I was visualizing my life. I was setting intentions, and I would let the universe, God, whatever you want to call it, guide me to where I needed to be. And today in my business, I use the same tactics, the same techniques that I did back then in my business. So I would visualize, I would sit there and, if I'm going to a networking event, or if I'm, having a conversation with an investor, or if I'm going on a podcast like this, I visualize beforehand the questions, the conversation, how I'm going to approach it, how I'm going to show up, because it's very, very important. What I learned a long time ago is that our thoughts are powerful vibrations, that we're transceivers. We transmit and we receive energy waves, thoughts, ripples, all of that. And it's important to have over our thoughts and over our mind, so that we're thinking positive thoughts. If we truly understood how powerful our thoughts are, we would not have a negative thought ever in our life, because, it says in the good book, right? Doubt the size of a mustard seed can move mountains, right? Translate that into our world and what we're talking about now. If you have 1 ounce, 1 iota of doubt that you can do this, whatever this is, you probably won't do it, because that doubt will then grow into a massive amount of doubt and negativity, and you'll talk yourself out of it before you even start. So by understanding that and bringing that into my world and into my business today and into my coaching program, the first thing that I talk about with my coaching clients is mindset. You got to have your mind right, because I could give you all the tools in the world. I could open up all the doors. I can make all the introductions. But if you don't have your mind right, none of that matters.
Yes, I wholeheartedly believe that. I'm in that realm of manifestation and, of course, spirituality and things like that. And I know that the thoughts that come into your mind, whether negative or positive, that's how they will manifest in your life if you truly believe in it. So yeah,
absolutely.
Yeah, great stuff. So you've been involved in single family, multifamily, commercial properties. So for someone new to investing, how do these asset classes differ, and how should they choose a starting point?
Great question. Single family, a lot of people start off at single family. It's the easy project, they're not millions of dollars. You don't have to go out and raise millions of dollars. And, we all live in an apartment or in a home of some sort. So we grew up in that. And it's, people see that as a lot easier to get started, to get your foot in the door. The thing with single families is, if you're going to rent them out, your cash flow is usually very, very slim. You have one tenant, right? It could be one family or one person or one couple, whatever it is, but it's one rental income that's coming in from that house. And if that tenant, if that family, if that party that's renting the house doesn't pay you that month, you're SOL, right? You're out of luck. You're out of luck. You're coming out of pocket that month to pay your mortgage, your insurance, your taxes, your repairs, your expenses, and that money is lost. That money is gone, right? It's very hard to recoup that. In multifamily, right? So now we have residential multifamily, which is 2 units, 3 units, and 4 units. And then you have what we call commercial. Commercial is 5 units and up. And what's funny is that mortgage debt, when you put debt on a property that's below $1 million for a single family home, a duplex, a triplex, a 4-unit property, that loan is recourse, meaning they can come after you personally for that money, the lender. When you're moving into the institutional sized properties, into the bigger properties, where the loan is $1 million or more, it's non-recourse. They won't come after you personally. They'll take the property back. You may have a foreclosure on your record, a blemish, but they won't come after you personally, which is kind of mind-boggling, right? Yeah. Under $1 million, they're coming after you. Over $1 million, it's all right. We won't go after you. What I've also found is that in multifamily, right, people will always need a place to live. Good times or bad times. Right? Good times, your rent can go up. Bad times, more people will come into your property. Your occupancy will grow. People always need a place to live. Now, let's take single family versus multifamily. In single family homes, the value of your property is based on the comparables, based on what your neighbors sold their houses for, right? If you have a neighbor that has to sell and they're fire selling their home and they're discounting the value of the price, guess what? Your house, the value just went down, because your neighbors just lowered their price, right? That's why they say when you're buying a house, make sure you're the smallest, ugliest house on the block, so everybody else could raise, their value will go up. Now your value will go up. In multifamily, you're buying 2 things. You're buying the actual real estate, the brick and mortar, the property itself, but you're also buying a business, right? Now, your multifamily property, that property's value is based on the business aspect of it, not the real estate aspect of it. So your value is based on the net operating income, the income that is left over after all of your operating expenses have been paid. So if you want to increase the value of your multifamily property, there's two ways to do it. Cut your expenses, tighten the ship, or increase your rents, and that'll go up. Your value of your property will go up. And it's based on cap rates and all, things of that nature. Where single family, that's just based on your neighbors. So that's what I like about it as well. And in multifamily, you have what we call economies of scale. More people living on a property, more people paying rent. And if a few don't pay rent, guess what? You've got all the others that are paying, right? I used to own a big portfolio of single families all around town, different places and whatnot. And I would have to deal with several landscapers. I would have to deal with several HVAC people, roofers and whatnot, because, the city where I have my house over there, that's another city. So the landscapers over here weren't going to go all the way over there. My roofer from West Palm wasn't going to go to Deerfield. So I was dealing with multiple vendors. In a multifamily property, I've got 100 people living in one complex. I have one landscaper dealing with that property, right? So those are the economies of scale that you're handling. And it's just makes a lot more sense when you're dealing with multifamily properties. You can really scale bigger. And on top of that, with multifamily, people think, oh, I need to use my own money. Even in single family, people think, oh, I got to use my own money. That's what I thought. And then I learned this concept, which is called the syndication model, which I learned also that the Empire State Building in New York City was bought through a syndication model. One of my partners, his uncle, I think his name was Frederick Wien, W-I-E-N, he went out. He was the lead sponsor, the lead syndicator on that project, and he got his partners and his friends and family to invest in the Empire State Building, and they bought it. So imagine if you now, let's say you're working and you've saved up some money, and you're like, it's not enough to put a down payment on a single family house, right? As an investment, you have to come up with minimum 20%. Let's say you're buying a $500,000 home and you got to come up with 20%. That's $100,000, closing costs, renovation money, all that kind of stuff, right? And you have $50,000. You're like, where am I going to get that? Where am I going to get the other money? You can now go out and you can raise it from your friends, but you can also take that $50,000 and bring it into a syndication model where now you have more buying power because you're in a bigger group, and you can go out and buy the Empire State Building, for example.
Yeah.
And you can also, when I got started out, I didn't know much about multifamily or syndication or raising capital. So what I did was I found someone who was successful and I partnered with them and I learned from them. And I was able to get my feet wet thanks to them and their knowledge and their education and their skills and their success. And I was able to tag along and build my success with them. And then I was able to go and partner off. Multifamily is a great model. It's a great business to get into. You can do 10 units, 20 units, 30 units. It's fantastic. And I want to give an example about how the appreciation works, right? So let's just say you bought a 50 unit property, right? It's not huge. And you want to go out and you want to do a very minimal increase in rents. You want to raise the rents by $50, right? So you have $50 times 50 units. Times 50 units, right? Times 12 months. So you've just increased your income by $30,000. Your expenses didn't move, right? Your taxes didn't go up. Your insurance didn't go up. Your property management expenses didn't go up. All that went up was your income, because you just added $50 more to the tenant. And, tenants aren't going to leave for a $50 increase, right? They understand. So you just added $30,000. Now, let's say you bought that property for a cap rate of 6%. So the way it works is we take our income and we divide it by the cap rate to see what value we've generated for the property. So let's say we divide that by 0.06, which is a 6% cap rate. By increasing $50 rent on a $50 unit, you just increased the value of your property by $500,000, by $500,000. You cannot do that on a single family home. See, if I raise my rent, if I raise my rent with my tenants on single family by $100, the value of the home didn't move, still stays the same. So that's the power of multifamily.
Yeah, definitely. And yeah, thanks for that example, so that the people who are out here listening, they really get the gist of exactly what you were saying, the comps in a single family versus a multifamily and how they're valued. So yeah, So I'm a numbers guy or units guy. How many units is in your portfolio right now?
So combined commercial and hospitality and multifamily, I have about, I'd say about 1,200 units right now.
Wow. Nice.
The past couple of years, I went out and I sold the majority of my multifamily properties, because we go with the cycle of the markets, right? There's buyer's market, then there's a seller's market. So we just came out of a very strong seller's market. People were throwing money at us to buy my properties, and I said, yeah, sure, absolutely. I mean, that's why we're in a seller's market, right?
Right.
So we sold it. Now we're back into the acquisition mode, and we're buying. We're putting out letters of intent. We're doing our due diligence. We're going to new markets and opening them up, and it's an exciting time.
Yeah, and I'm glad you brought that up as well. So you've developed these systems to chart a market's progression and pinpoint the right time to exit. So Correct. Can you share what signs you watch for when it's time to buy, hold, or sell?
Yeah, sure. No, great question. So we look, first, we look at specific markets that have job growth, right? We want to see a lot of jobs moving into an area. We want to see family growth, right? How many families are moving into the area? I'll check also uhaul.com, for example, and see one-way destinations. Where are people moving to?
I've never heard that one.
That's a great, it's a great way to chart and say, okay, it's a starting point. Where are people moving? Oh, they're moving over there. They're moving to Wazoo, Wisconsin, whatever it is, right? Let me go check why. And then you can dive deep into it and so forth and move on. So job growth, that's the main key. Population growth. Right? Because job growth, you got to be careful with job growth, because when Amazon, when Target, when Walmart, when they're coming in and they're building these centers, right? You may see a lot of job growth because of the construction jobs that are moving in. But so you want to make sure that you understand what type of job growth is happening in that market. Right below it, you want to make sure that there's population growth. How many people are moving to that area, right? How many Home Depots are being opened up? How many Lowe's? How many Targets? Is Walmart moving in, right? Mm-hmm. Because these guys, so my question to your listeners is, how many of you want to spend millions of dollars doing market research? Probably nobody, right?
Right.
Why don't we go and follow the people that are spending millions of dollars, right? Home Depots, Lowe's, Walmart's, Targets, all these big Starbucks, all these big anchors, big box retailers, they spend millions of dollars, and they will go into an area that is gentrifying, where population growth is moving, where there's a lot of construction, right? So think about it. Home Depot, what do they sell? Home improvement stuff. So if they're opening up a place in an area and they're coming in, what do you think is happening in that area? There's a lot of movement. There's a lot of construction going on. So that's a good place to look, right? We want an area that has a major airport. Is that airport expanding? Are there, what's going on in that area? So, we're working in different markets that is truly expanding. I'll talk to the Chamber of Commerce. I'll talk to the Economic Development Committee, and I'll find out who's coming in, what companies, what businesses, what headquarters are moving in, what incentives is the city giving to major corporations to bring their people and their headquarters to the city. Mm-hmm. What hospitality groups are coming in and building hotels in that area, right? Hilton, Marriott, again, they spend millions of dollars, right? Now, also depending on what flags are, that are they putting in those areas? Are they putting in their nicer, higher end, or are they putting their lower end flags, right? So these are all signals, and these are all things that we look at when we're diving into a new market. How fast will that market double? Is it going to be 10 years, 20 years, 50 years? Right. So these are the things that we look for when we go into a market. How many cranes are popping up? I'll go into City Hall and I'll ask, how many multifamily permits have been pulled? How many permits have started construction? How many units are coming online within the next 5 years? These are all things you want to look at so that you can understand, is this a good market to invest in?
Nice.
Be able to push rents. Yeah. So those are the things, those are the markers, so those are some of the markers that we look at. And those are the things that I teach my coaching clients when they're looking at new markets to go into, right? Those are the key factors, because you want to be in a market that is on the uptick, and you want to understand where that's happening, and you want to pinpoint it. One of the people on my team, he's an applied demographer. A demographer studies the movement of people in a specific area. So he tells us this neighborhood is moving up. This neighborhood is moving down. This city is on the right move. This city is flatlining, so that we also know that this is a good place to go.
Nice. Yeah, it's always good to have a demographer part of your team, or at least be able to utilize the system if they developed a system that they've utilized. So you mentioned earlier syndications. What are some of the other creative financing techniques you've used that might help an investor who's just getting started?
Yeah, great questions. There's the JV format, right? You go out there, you partner up with someone who's got money, and you just partner together and you say, hey, you bring the money, I'll do everything else. Let's partner together, right? That's the JV, and that stands for joint venture model. We are also now looking, every time we go and we talk to a seller, we're asking them if they're willing to offer us seller financing, right? That's a great way to get in. And there's a lot of upside for a seller to offer seller financing. They don't have to pay capital gains. They get cash flow for many years, and so forth and so on. So joint venture, seller financing. We're also looking to, if any sellers, if they have assumable debt, today's market, we're looking at anywhere between 5.5% interest to 6.5% interest. While it's still very low interest rates. I remember when I was a little kid in the 80s, my dad, he went out and he built our house, and he was paying 18% interest on mortgage. And here we are, we're crying at 6.5%. But, but it's also, a factor where sellers aren't reducing their price points because they bought very high, so they can't really reduce. So you've got assumable debt that you can look at. You've got seller financing. You've got joint ventures. These are the models that we look at when we're doing. You have private money lenders as well. You got hard money lenders, that these are short-term loans that you can get into with almost zero money out of pocket. You can renovate the properties, bring the value up, and then refinance. I had one coaching client years ago, right before COVID hit. He actually went out and he bought properties in 2008, right before the market crashed. And the market crashed, he lost money, and he lost a lot of his family's money, and he didn't know what else to do. And he kept quiet for many years. And then he came to one of my mastermind groups, and we worked on it, and we taught him about the private money, the hard money, using other people's money. Because he was always like, wait a minute, I thought I had to use my money. Like, no, you can use other people's money. And we talked about that whole process. He went back to Connecticut, where he lives, and he bought a triplex. He got a hard money lender to come in for the debt, and then he got a private money investor to come in and to give him the money for the equity. He came out with zero money out of pocket. He took ownership of it. He started renting it out. He started renovating it and renting it out. He held it through COVID during the pandemic. And then he went and he sold it, paid off the hard money lender, paid off the private money lender, and he was still left with so much money. He was able to pay off all his debt, his credit card bills, and pay back his family the money that they lost in 2008 and 2009, using other people's money. That's the beauty of real estate.
Yeah, it is. It definitely is. OPM is the way to go in this business. Also, Nitzan, you've delivered full cycle returns for up to 2x multiples for your investors. What key principles drive that kind of performance?
Good question. We look for, whenever we're putting a property under contract, or we're underwriting, we're researching, we're looking for what is the journey of the property, right? What are we going to do to that property? Where is it today? Where is it in the market? Where is it in the neighborhood? What's happening there? And what are we going to do to that property, right? What's the journey? So we look to hit, out of cash flow, we're looking at a minimum of 7% to our investors from the cash flow. That's kind of the floor that we want to give them. But, we underwrite it very, very conservatively, where we're looking and saying, okay, you know what? we're not going to cut expenses drastically. We're going to keep it going, but we're going to tighten the ship up wherever we can. We're going to put a good property manager, on-site manager in place. We're going to make sure that we're going to renovate. And we do a lot of market research in the area to make sure that we can take the property to where we want it to go, right? So it's that journey that you're looking for. And we're saying, okay, what's our break-even point? What level of vacancy and, rent can we break even at? Right. Then from there, we take and say, okay, how much more do we need to have to be able to pay our investors? So, so the rent is crucial. Delinquency, right? When we're doing our research, we're going into a property and we're going to look at the current delinquency that the property has, right? Delinquency is a big headache, especially when you're buying a property. If you have a lot of residents on site currently that are delinquent and they're constantly delinquent, those people are probably going to be some of the first people you're either going to evict or they're probably going to just leave in the middle of the night. So you have to take that into consideration when you're underwriting it, and underwrite at a higher vacancy when you take over and then build it back up, right? And I see a lot of people, they don't take that into consideration, and then they buy the property on day one, their occupancy goes from 95, 97 down to 85% vacancy or occupancy because they didn't take into consideration that people were going to leave.
Right.
But you really have to understand that. And I teach that to my clients, that you got to understand the ebb and flow of your property. That's why I always say, look for the T12, look for the trailing 12 income and expense report. A lot of times brokers will give you a one column. These are the yearly expenses, and they just give you the totals. I don't want to see that. I want to see the actual trends. I want to see the monthly trends. What's going on? How many people are delinquent? How many people are vacant? How many concessions did you give? What's your bad debt? What's your other income like? And what is your other income made of? And I see this being a huge mistake. People, they underwrite and they analyze and they see, there's a huge other income. They see, there's, what's it called? Eviction fees. They see a lot of other income that is huge, right? Delinquent, late fees, all these charges because people are late because they have, the property manager didn't put good, well-paying tenants in the property.
Yeah.
So now our job when we take over is to put an on-site manager that is rock solid, that knows how to do background checks, that knows how to, put in the right residents. When I say right, I mean people that pay, that have good, good track record of paying their rent on time. So what happens is that your late fees, your delinquent payments, all of that on your other income goes down. So when you take over, your income is actually going to shrink from that other income stage. So those are the key, some key points you got to look at when you're underwriting and when you're building up your pro forma, right? Your numbers, so that you can talk to your investors and you can really hit those points. Because the last thing you want to do is tell your investors you're going to make that much and then you go in and you make less.
Right. So Nitzan, tell my listeners a time when you had underwritten conservatively and were ready to take down a property and deliver that X plus multiple to your investors, but at a stage you decided to walk away from a deal. We know you're going to like this episode, so please like, comment, and subscribe to this channel so you can be notified when the next episode drops.
Yeah, no, we just had that right now. We just put a 72 unit under contract, and the ownership is another syndicator that I know, and they've held the property for coming on 5 years now. And I saw this property 3 years ago. And 3 years ago, we submitted an offer. They said no. They said, you know what, we'll take care of it. But basically, we put the property in the contract now, and this was about a month ago. We went and we did our unit by unit walkthrough inspections. Now, when you do your initial walkthrough, the broker and the property manager are going to show you 2, 3, maybe 4 vacant units, and those units are okay. They've cleaned them up, they made them rent ready, and it's okay. What I always tell the brokers, even with my initial walkthrough before the inspection and whatnot, is listen, I'm flying in to see the property. I want to see the vacant units, but I would like to also see one of your worst units. I want to see the worst unit. Even if there's a tenant living in there, I just want to stick my head in the door to see what it's like. And I insist on it. I insist on it because of what happened. This time I did not insist on it. And when we put the property into contract, before we did, I walked in, I saw 2 vacant units. I'm like, oh, this looks pretty good. Okay, great. Then we had our inspector, and I walk every single unit with our inspection team. The inspector walks in and I'm right behind him. I'm looking under the faucets. I'm under the sink. I'm looking at the hot water heaters. I'm looking at everything at the exact same way that the inspector is doing. I'm right behind him. So we walked in all the 72 units. We found black mold. We found cockroaches in every unit. We found that all of the AC systems were over 20 years old. All the hot water heaters were over 20 years old. And you know how the hot water heaters, they have the pressure valve that the pipe has to come out of the unit and go down. So in case there's overpressure, it kind of just drips out. These pressure valves, they were going up, which means it causes extra pressure, which makes the hot water heater a time bomb.
Yeah, basically.
Right? It could explode.
Yes.
So we found all these things. And, we put in in our underwriting, we put in a certain amount of CapEx money saying, all right, you know what, we're going to do it's going to be about $750,000. After we went in and we saw all of these units and how bad they were, we came back and we redid our numbers, and we went into the website HD Supply, which is where we get all our supplies from, and anybody who's doing syndication, that's probably where you're going to go, or one of your major supplies is hdsupply.com. We went in and we said, okay, we need hot water heaters, we need appliances, we need this. Well, we did it. It was and mold remediation alone could cost up to $500,000.
Yes.
Right. And you got black mold. We walked into units that they had little kids, and the ceilings, instead of being white, were black from black mold. There were bathrooms that the upstairs leaked into the bathroom downstairs, and the ownership came and they cut out the ceiling. They fixed the leak, but they never repaired the drywall. So the people were telling us that they had to go to their families outside of the complex to take showers.
Wow.
Okay. So we went in and we talked to the ownership, and we said, listen, we're willing to buy it from you today, but we got to, we'll eat some of that extra CapEx budget, but we got to come down about $1 million on purchase price. And they said, no. They said, we'll take it off the market and we'll do the renovations. This was the same story that I heard 3 years ago, and they didn't do anything. So we had to walk away from that property. And you got, the Kenny Rogers song, right? The Gambler. You got to know when to fold them, right? Know when to walk away, right? Same thing here. You got to know when to walk away. Was it upsetting? Was it depressing? Did it take the wind out of our sails? Absolutely, because this market that we're in is a hot market. We were very excited. We already lined up our investors. I mean, we could have closed this puppy in a heartbeat, but they said no. So we walked away. Right. We walked away. You got to learn to walk away.
Absolutely. As they say, some of the best deals you do are the ones you don't. So, you're very sharp, and I'm pretty sure my listeners can see that and everything. So what daily practices or habits, maybe from meditation or the naturopathic medicine, help you stay sharp and resilient as an investor and entrepreneur?
I love that question. I love it. So I do this, and I tell my clients to do this as well. At night, before I go to bed, I take a little piece of paper and I write 3 to 5 goals, affirmations in the present tense, right? I am earning $25,000 a month. My portfolio consists of 1,000 doors, right? I weigh 180 pounds. I work out 5 days a week. Whatever your affirmations and your goals are, it doesn't have to be 120, 3 to 5 of them. And I put it down, and then I take a tall glass of water. And I put the glass of water on top of my affirmations at night. Okay. And then I wake up in the morning and then I drink the water. There's a Japanese scientist, and I'm probably going to destroy his name, something of that. He's got a book called Water or something of that nature. And what he's done, he's a scientist, and what he's found is that he would take jars of water, and then he would tape on one, love, hate, ugly, beautiful, and he would leave it there. And what he found was that the molecular structure of the water that had the word love on it would reshape itself to be a full water molecule. The ones with the word hate on it would start to deform and get broken and separate. He would also take sewage water, for example, or muddy water, and he would put the word love on it. And then he would take it and he would see under a microscope how the molecular structure of the water crystals would start to reform themselves and readjust. So he found that water is very susceptible to vibrations and to energy. So you put that glass of water on top of your positive affirmations. Now the water is absorbing that energy. And now those affirmations are in those water molecules. And now you're drinking that water and you're absorbing those affirmations and they're going into a cellular level. Mind blowing, mind blowing. So that's one thing that I do. The other thing that I do is a lot of times when I wake up, I'm a righty. So, I'll go brush my teeth with my right hand. Right. Mm-hmm. 2-3 times a week, I'll go and I'll brush my teeth with my left hand. It's very awkward. It makes the brain freak out, right? It's like, wait a minute, what are we doing? It's uncomfortable. It does something in the brain that it opens up different synapses and it connects different things. And so I'll do that. And then I'll look in the mirror, I'll look myself in the eye and I'll do my affirmations. I love you. I'll say that 10 times with power. I am successful. I am enough. I am awesome. I am a multifamily powerhouse. I believe in myself. I believe anything that I can do. I know I can do whatever I accomplish. And I say those and I do that. And then I will it's not enough to breathe through your mouth, but I will breathe like heavily through my mouth, like really deep breath, and I'll oxygenate my body. Now you've got cellular affirmations. You've got your mind synapses going. You've just oxygenated your body more than you ever have. And that just takes you to a whole nother level of playing field. Now you're functioning at a maximum capacity rather than the lower ones. And I have, and excuse me for my language here, I have my oh shit rule. Okay. When something goes sideways, and we're in real estate and we're in life and things go sideways, you're allowed to say the oh crap phase 3 times. You're allowed to freak out 3 times. Like, oh my God. And that's it. Now collect yourself and go, okay, that was the problem. Now I got to find the solution. Yes. Right. One of my coaching clients, he said it best. He goes, the mind that sees the problem or focuses on the problem cannot be the same mind that finds the solution. I love that. So you have to switch. You have to literally go from, okay, this is the problem. What's the problem? The problem is we've got a week to close and we don't, and we're $100,000 short. Okay. That's the problem. If you keep focusing on the problem, oh my God, we're $100,000 short and we got a week to go. Oh my God. What are you focusing on? You're focusing on the problem. Absolutely. But if you understand, okay, we have $100,000 that we need to come up with in a week. That's the problem. Great. Now, let's take a piece of paper. Let's write down all the solutions that we can come up with. Let's brainstorm on solutions and only focus on solutions, right? That's then you're focusing, and the energy, you're calling out to the universe, God, whatever you want. And you're saying, now bring me the solution. I'm open to receiving the solution. When you're focusing just on the problem, you're not open to the solutions. That's right. That's right. I love it. I love it. Well, Nitzan, it has been a blast having you as our guest today. As we close out, please tell our listeners where we can learn more about you, get in touch with you, and learn about all the fabulous things you have going on right now. Absolutely, man. And thank you so much. So if for those of you that are watching the video, if you look right here, this is my phone number right here, fun 212-7247. And do me a favor, I'd love to give your listeners a free gift. Yes. So please, for those of you listening, text me 561-212-7247. Text me service to syndication, and I will send you my due diligence checklist. I've created a due diligence of every single item. I've broken it down. So you walk into every single unit, you have it there. So you don't have to go through your memory. It's on a checklist, right? So text me 561-212-7247, service to syndication due diligence, and I will send you my due diligence checklist. You can also go to my website, which is Multifamily Inc., and it's right behind me. It's multifamilyinc.com. And if you want to work with me and you want to see if we can work together, it's multifamilyinc.com/application. Fill out the application, read every single application. I will be the one getting in touch with you and we'll talk. So you got my website, you got my phone number. You can also email me at Nitzan, that's Nizan, at MTN, abbreviation for mountain, MTN investmentgroup.com. And I'll respond. I'm there.
Awesome. Nitzan, again, I want to thank you for your time today and all the wisdom you have provided to my listeners. And I want to thank you, our fans, for tuning into the Service to Syndication Real Estate Podcast, where we want to add value to you and your investing business. Please tune into our next episode where we will interview another fantastic investing professional. See you next time.
Thanks for listening to the Service to Syndication Podcast. We want you to know that we love and appreciate your support, and we are grateful about being a part of your journey to becoming a successful real estate entrepreneur. Please share this episode with a friend who you think will get a lot out of what you just heard. Send it to someone who you know is interested in real estate and dreams of having it all and being the best they can be in all areas of life. And if this was really valuable, share it on your social media stories and timelines. Thank you for watching and listening. Now go be great.